Meantime, the Nasdaq, S&P, and Dow coming off their first negative session in 3. Our next guest did lower his S&P target from 6,500 down to 5,800, citing tariffs and some macro slowing. Scott Chronert joins us today, Citi's U.S. equity strategist. Scott, great to have you back. Thanks for joining us.
Morning, Carl.
So, just the target or earnings as well? What'd you bring down?
Earnings as well. We went into the year looking for 270. We've begun to feel a little bit of macro influence on our aggregate numbers. But that combined with a reset for tariffs brings us down to 255, Carl. We think the band in terms of earnings outcomes from here is going to be much wider than is typical as a function of the tariff uncertainty. But all told, what we're doing is allowing for a little bit lower valuation, a little bit lower earnings. But 5,800 base case target still sets us up constructively for a decent year for U.S. equities from this point.
So what's the reaction function for you? For example, if we got news that, all right, we're engaged with the Chinese on talks, would you instantly look to revise higher a target, or is there enough macro pressure getting baked in that there's a bit of a Pandora's box effect in play?
I would go with the latter, a little bit more Pandora's box. We have to let this play out. We know that the tariff discussions are going to continue to persist and be a source of volatility. Our preference is to look for weakness related to that, but on the China tariffs, we're modeling in our work something approaching a 60% net effect on China tariffs, in addition to a 10% base case. It isn't too far off what we've been talking about in terms of what-if scenarios a few weeks back. But when you look at the way this sets up, Carl, the sector influence is where it's really going to kind of play out. So if you look at consumer discretion and tech, in particular hardware, with an assist by semis, that's where your real hot buttons are in terms of tariff influence right now. So on the China discussion, any improvement in terms of the circumstance there, probably a net positive for those parts of the market.
Yeah, I certainly don't envy the work of trying to model out all the various base cases in the current environment. How do you think about foreign holders of U.S. equities in this environment? I know that's probably not a component to your model, but obviously we've seen at least speculation that foreign holders of other assets have been maybe selling a bit as the geopolitical tensions rise. Do you expect the same thing to be true of equities, or do you think that it's already happening?
Yeah, so I think selling a bit is probably the operable term here. When you look at what's happened over the past couple of years, because of the Mag 7 influence, your foreign ownership component has really focused on this U.S. The term exceptionalism comes out a lot, but it's really the unique dynamics that come with that mega cap growth cohort. So there's been a really strong emphasis on that part of the market, which has led to flows into the U.S. over the past couple of years. That's been gradually resetting, okay? The halo effect has been coming off of those stocks since the beginning of the year, quite honestly. But when you look at the U.S. from a foreign investor perspective, we're still over 60% of the ACWI index, the all-country world index. Very hard to disaggregate oneself from the growth profile of U.S. equities. So, yeah, a little bit of flow fraying around the edges, but a far cry from saying that foreigners are evading the U.S. in aggregate, if you will.
Hey, finally, Scott, we talked about gold this morning at 33.25. There's been some investor surveys or fund manager surveys this week that sort of characterize gold as a pretty crowded long now. And I wonder if you'd be fading some of those safety trades.
Well, the way we're setting this up is obviously where we're going is that we're in the throes of the tariff-related uncertainty right now. We think with the Q1 earnings period, you're going to see this downward revision bias from corporates as we go through it. That's supported the gold tailwind. I think gold still has a bid to it, but in our playbook, as we get closer to mid-year, begin to look forward to the second half of the year, the emphasis probably comes off a little bit as we begin to look forward to some settling in on the heels of the tariff disruption we're dealing with right now. So gold, tailwind for now. Maybe that changes as we go into the back half of the year, though, Carl.
Right. It's hard to believe we're already talking about the back half. It's moving quickly, Scott. Thanks. Good to see you, as always. Scott Chronert over at Citi.